Our next guest is urging investors to be cautious before buying into ARM's debut. Jonathan Morgan is a global deals analyst at the Edge Group. Jonathan, great to have you with us. You actually say that ARM could suffer the same fate as Uber, which is not a good one. It peaked, and then it took a long time for it to recover back to near its IPO price. Why do you think it could follow the same pattern?
Yeah, so I think for us, we're looking at this IPO coming out tomorrow in two different phases, or two takeaways. One, a lot of the IPOs, or most of the IPOs, I should say, have been reduced to selling the company at its highest possible price. So, raising as much capital as possible, making as much money for the owners. And for us as retail investors and your investors on this show, that doesn't sound like a great investment you want to get in on day one. So there are going to be certain hurdles around that. So you mentioned Uber being a situation where it took a while for it to even climb back to its IPO price. Lyft is another one. Rivian, I don't think it's even recovered since its recent listing. So that's a reason why there is a pause to be cautious on day one for this stock. And the second takeaway, I mentioned there are two takeaways, is that from what I'm hearing from speaking to our clients, there is an appetite for new big situations on the market. So yes, hence why this is so oversubscribed at the moment. But you probably might be surprised to hear, but we're covering all listings, even spinoffs, and there's going to be about 8 global spinoffs taking place just in the month of October. So hence we're saying remain cautious. There's going to be more opportunities to look at interesting companies coming down the pipe.
How do you think about the ARM IPO being a barometer for other new issues? It's a very sort of specific situation where SoftBank still owns 90% of the company. It had been public before, taken private, now public again, versus, a new issue that is a company that's never been public, that has, experienced just basically from the startup phase to issuance.
So from our standpoint, I think we're looking at it just purely on the gearing to sell, market up in terms of the valuation standpoint. So I think from our standpoint, we are going to see more IPOs because of the appetite of the market. So recently, while yes, this is going to be a very first issuance with IAC and Turo, that was canceled in 2022, but they're now looking to bring that back up to the market. I think there is some parallels between what we're seeing with the spin-off market, where there was only one really big listing throughout the whole year, above 10+ billion. And now that you're seeing names like ARM coming out at 50+, you are going to see more issuance coming down the pipe.
So which ones are you looking in the pipe as the next ones? We should sort of compare it to how well ARM did.
So I would say in terms of some of the larger names coming up, as you mentioned, we like newly listed companies. So on the spinoff front, Danaher, $190 billion company, they're looking to spin off their water quality and product identification business. That's going to be roughly, we value that around 17 to 18 billion market cap on listing. That is going to be determined by the market what price is going to be listed at versus the IPO market, where there's one price of one buying, there's no averaging down. So we will see when issue trading taking place end of this month. It will list early October the 2nd. That's one we like a lot, especially since the value creation that the Rails brothers have done at Danaher. And of course, that's those 8 situations I mentioned in October doesn't even include 3M and GE coming up towards the end of the year. So that's where we're saying we believe if investors should be spending a lot of their time at this point. So remain cautious. You could look at ARM in the next couple of months outside of this IPO.